Good morning. Happy Thursday to you. I'm Marlon Bowling, your tour guide to the ag commodities. So glad you could join us here on the Market Day Report. Well, it's Thursday. That means we get our weekly export sales data dump from USDA, and we did, in fact, get those numbers. Let's peruse what we have this time around here on the report from USDA. So what did we sell last week? Very interesting. We had corn coming in at 925,900 tons. And now what we do here is we combine the current and next marketing years together. So we had a total 925,000 and some change. We had soybeans at 1.27 million tons, soy meal 333,900 tons. So that's a second week in a row of pretty good sales on meal. And soy oil came in at 2,200 tons. The wheat 561,400 tons. Now, we also had some numbers for grain, sorghum, and cotton and rice. Let's take a look at what they had. Well, on these numbers, we had the grain sorghum at 70,800 tons, upland cotton at 219,800 running bales, and the rice at 42,700 tons. Last week was actually a net reduction on the rice, so a nice bounce back there on those numbers. And then on top of that, we actually had an overnight export sale that just came across the wire here just moments ago from USDA. And they said, well, hold the phone. We sold some more soybeans, kind of an odd amount this time. It was supposedly to China, but it was 106,000 tons. Now, that must be kind of an odd-sized boat or two that they're using this time. Usually it's like 130 or 132,000. Thereabouts, but 106,000 tons to China. And the other oddity is it's for the 2023 and 2024 marketing year. So that would be for this next crop coming up this coming fall. So they don't want it right now. And I thought that was a little intriguing. To talk about it, let's bring in Brian Hoops of Midwest Market Solutions and see what he thinks about all this. So let's talk about this. Kind of an odd sale to China, didn't you think?
Yeah, a little bit from the standpoint, Marlon, that, it's for the 23-24 marketing year, and the amount is, less than two cargoes, cargo and a half. So it's a little strange, but, it's basically just a free call option for China to look at the markets over the next year and a half before they would have to take any type of deliveries. So certainly it could be adjusted, it could be canceled. The export sales that you were talking about this morning, pretty supportive, I thought, all across the board for corn, soybeans, and wheat. All these numbers that we saw are above what we need to be on a weekly basis to meet the current USDA forecast. In the soybeans case, it's well above. We were over 42 million bushels. We only need to be doing about 9 million bushels. So it's a really strong number. It's the highest wheat number, I believe, in the last 9 weeks. And so overall, this export sales report, I thought, was pretty constructive for the markets going forward. We've talked about the private sales this week about how some of these unknown destinations end up getting switched to China. Almost half of China's purchases of soybeans this last week were because of switching from that unknown destination and allocating it to China. So, there's a precedent that they have followed, and we expect them to continue to follow and still expect that these soybeans eventually will be changed over to China at some point that were purchased earlier in the week.
And it's interesting that this is all happening as they are now celebrating their Lunar New Year. So kind of odd in that regard, too. They don't normally do much transactions during this celebration period. All right, let's review where we went overnight on the Globex trade with our quotes provided by Bar Chart. And we were higher overnight. March corn was 3 3/4 higher at 678.5. You had the December new crop corn gaining a couple of cents. It finished at 590. On the soybean trade, you had the March 7 higher at 1509.5. And on the new crop November soybeans overnight, we were 3.5 cents higher, and they actually finished at 1348.25. Well, on the wheat in Chicago, sizable gains there. March was 9 higher at 750.25, so it made it back up to 750. On Kansas City hard red wheat, March was 10.5 higher at 853.75. Meanwhile, on the spring wheat trade in Minneapolis, you had the March contract gaining 6 cents at 915.5. And for those of you watching the cotton market here, we had the March 200 points higher. That's right, I said higher. 2 cents higher at 88.66 per pound. December new crop was up 128 points. We'll come back and we have some beef and pork export sales numbers, and we had a cold storage report that came out yesterday. All kinds of stuff to cover. We'll have it when we come back. Okay, as I mentioned, we had beef and pork export sales last week as well. Let's take a look if they were decent or not. Well, you be the judge on the beef. Hey, look at this. 25,100 tons were sold last week. And on the pork side, 44,700 tons. On the beef side, China bought 4,200 tons. On the pork side, holy moly, they bought 12,500 tons this past week. That was impressive. Brian, what did you think about that?
Yeah, overall, these numbers are very strong. Mexico is actually the biggest buyer of pork of over 17,000 metric tons. So, yeah, between Mexico and China, they bought almost all of our pork products that we exported last week. But again, a very good number for both beef and for pork, above what we've been doing recently as we went through the holidays. And we definitely need that, as we saw kind of a buildup domestically of stocks, especially for beef last month in the cold storage report. So, we're going to be very dependent upon domestic demand. May be kind of stagnant this year, but exportable demand, we're really dependent upon it this year to move through some of this product that we have. And certainly there's going to be tight supplies of cattle going through this month, through this quarter, and all the way into the second and third quarters of this year, with the upside limited or expanded, depending upon how good our demand is this year.
On the cold storage report that came out yesterday, we have those numbers, and it was intriguing to me. Every single line item on that report showed higher inventory from a month ago and a year ago. How bearish would that be for the market today, Brian?
I think it's going to be kind of absorbed by the market. I think we're going to be more focused on the big slaughter pace that we saw yesterday. We were talking yesterday morning that maybe some of these packers would slow their kills down. They did not do that on Wednesday. They jumped the slaughter pace back up to 127, 490,000 head for the week. That's a very strong number. Really going to get down to Saturday's kill. If they have a decent Saturday kill, feedlots are going to be sniffing out that we're going to see higher cash trade, because they're going to have to buy up for their inventory, and that's where the asking prices are this week, about $2 higher, 157. And hopefully we'll see some of that trade develop today or tomorrow.
And remember, yesterday, almost all the livestock futures were just quietly firmer. Brian, thanks for helping us start out the day today. I appreciate that. Brian Hoops of Midwest Market Solutions. So, Tammy, we have the makings for an exciting open this morning. We'll do that at the bottom of the hour here.